Welcome everyone back to Chart Fanatics, the go-to channel for all the very best trading strategies and concept breakdowns with the very best traders in the world. Talking of which, today we have a very, very special guest. He's currently on an incredible run this year, over $400,000 so far, and just in the last 24 months closing in on $1 million. And we're going to break down the exact strategy he uses. He is the founder of Options Insider. It's the one and only Vincent Desiano, aka Desi Trades.
Thank you, Riz. I appreciate it.
My absolute
Thanks for having me.
No, thank you for being here. I'm super excited to go into this strategy. Where do you think the best place to start is?
Well, first of all, I want to say this is like the best podcast for me. I love levels. I love charts. That's like everything. So I'm super excited.
I think we talked about that on our podcast.
Yeah,
you were saying how I wish we had charts.
Yeah, exactly. I think we start with just the core strategy, which is the break and retest. And it's a widely known thing to look for. But how you execute it, how confident you are in it, the psychology behind it is also a huge factor of can you execute it correctly, which is just massive. The concepts of what you're looking for are quite simple, but repetition, experience in looking for it, doing the same thing over and over again, really is the differentiator of are you successful using it?
Yeah, no, got you. So let's begin. Let's crack straight on.
All right, so we can just go ahead and do some very basic examples of what I look for. Obviously, we'll jump into the charts later and get a better idea of exactly real examples, live trades as well that I have for you today to really show you exactly what it is. But the best setup, the best break and retest, the A+1 that I'm always looking for, the one that I think works the most and I find most success of is when we have a previous day high. That's when I am locked in knowing that this is absolutely something that I'm going to look for, right? So let's go ahead and just put a little dot here and say that that's PDH, right? PDH, previous day high, and we're going to go ahead and just put a little chart that goes up to that level, right? So that's our previous day high, right? Let's say we sort of topped out there. We went back down in the pre-market. Let's go ahead and put a line here that indicates the end of day. Let's say this is on Monday. All right, so that's Monday's trade. That's Monday's chart. We have a previous day high of, let's say, $200, right? We're not going to use stock X, just so we know. Apple's around $200. We could use Apple as an example. So we have 200 previous day high in Apple. We didn't trade anything that day, right? No trade set up. It is what it is. So then we have our after hours, right? After hours, we have let's just say we sort of open up within that range, and we open the day pretty much flat. No overnight gaps, no overnight downside. We're just staying and opening at that same level we closed at.
Gotcha.
So the next day when I see this, right, the first thing that I'm going to do is I'm going to look and make sure I mark out that previous day high, right? So that's going to absolutely be on my chart as a level, right? Just sort of putting that on my chart the next day, and going to be something I very closely watch to see if Apple, or this stock in this example, is able to break above that high, right? So that's a huge thing that I'll look for. Now, of course, we'll get into some examples of using the S&P as well as the NASDAQ, right? Because those come into play of what's Apple going to do, right? So we're also going to be watching the S&P and the NASDAQ. After we go over this, I'll break that down as well. So at the core of it, really all I'm waiting for is Apple to move higher, right? Move up, break above that high, right? And that's when I start to get interested. Now, that's not anything to do with an entry. There's no entry there. You don't just enter on a breakout of a previous day high. That's probably the most amateur way to trade, and I think where a lot of people sort of get stuck in fake outs, right? Because they're just breaking a high, taking a trade, and hoping that it continues. What I want to see happen is Apple to pull back to that level, right? And then this area where we start to come back down to that previous day high is something that I like to call, that is called the battle zone. So the battle zone is really when you start to see that price action start to get really tight, right? You start to get that wick action. You start to get some really clear examples of some manipulation going on in the market. And that's where the money is made. The battle zone is where the money is made. Being able to read the price action at that retest, because that is the retest, right, is how you get paid.
Gotcha.
Right?
So rather than just break, retest, you'll break, retest, and actually looking at then the context of the price.
Exactly.
Now, what time frame, would you be looking at?
So I always will watch the 2-minute time frame.
Gotcha.
I think the 1-minute time frame is a little bit too messy, right? It adds a little bit too much noise to the chart for me. So I'll always use that 2-minute time frame. And I would say on average, this retest should take anywhere between, at least from the averages that come into my mind and knowing my trades, I would say anywhere between 6 to around 10 minutes. So about 3 to 5 candles is what I'll wait for to look at what's going to happen in that area. So about 6 to 10 minutes, right, of price action. And there's really you can't really use time as how long are we going to look for that?
Yeah.
It's really just, what are the candles looking like above that retest level? Am I seeing bullish wicks like this? Am I seeing buyers pushing up, right, and holding price above this 200 level? Or am I seeing, candles that look bearish, right, and holding, let's say this is our 200 level? Am I seeing us start to fail that level? Right. So I need to start understanding the price action through the candles, reading price action through the candles of what's going on at that level. Now, something I want to talk about here is, you had a previous guest on your show, Carmine, right? And so Carmine really gets into the depths of what's going on and that price action using things like order flow and things along that line. I believe that I'm able to read that order flow and understand what's going on behind the scenes by really focusing on what the price action is showing me. So I know from past experiences that when I watch the battle zone, when I start to read price action at that important retest, which is previous day high in this case, I know that I start to see price action starting to form a battle, right? You're starting to really see the wicks go around. You're not getting very fluid action, because the fluid action is that breakout.
Yeah.
The fluid action is you're pulling back, right? Which is what some people will call a fair value gap, right? FVG, right? That's really that fair value gap. So when you're pulling back into a fair value gap, really all that is a break and retest, the retest.
Yeah.
As Carmine would call it, a low volume node. So really all those concepts really mean the same thing. It's, at the end of the day, what gives you that confirmation to take that trade? What is something that you're always looking for, something that makes you comfortable, something that gives you an actual game plan and a structure behind the trade you're entering, right? Because you have to be confident with what you're looking for, right? I've built this out. I know, I dream about this. I mean, I know exactly how this plays out, right? When I'm looking at the charts, which we'll look at later, right? I know exactly what I'm looking for to fire and to take that shot. Right? And at the end of the day, it's not 100%, right? No trading strategy is 100%. There's no such thing as a 100% trading strategy.
That's right.
Sometimes I'll go ahead and zoom in on this and make this larger for the audience. I'll make an oversized candle here because obviously we're a little bit small on the whiteboard, but let's just say we get a wick underneath our previous day high, right? And let's say that candle closes something like that, right? And so you do at times see price temporarily break below that retest level, right? And so there is somewhat of a margin of error that you have to allow at that retest level. Yeah. Right? You can't just say, oh, it went down, right? It went under for a second, no longer a trade, right? That's just being too precise and too tight with what you're looking for. Exactly. Right? So that's why we want to see price develop. We want to see, okay, a few wicks that come under. We want to see a few wicks that pop back over.
So you said that battle, you want to see those buyers and sellers interacting at that specific level.
Exactly. And so what I want to do is I want to sort of zoom in on just this area here, right? So we'll delete everything here, and then let's just zoom in on the battle zone, right? And so we'll go ahead and go over that. So let's just title this the battle zone, right? And this is where the money is made, is in the battle zone. So right here.
Hey guys, just a very, very quick one. If you're enjoying this playbook and you want to get it sent directly to you, make sure to go on chartfanatics.com, put your email in, and every episode we drop, we will send you a direct PDF breaking down this exact playbook. Or alternatively, also, the playbooks will be put all together with the rules over on TradeZella. That is an incredible collaboration. So if you want to actually add the playbook to your TradeZella, make sure you go check that out as well. But let's get back into this episode.
So let's say we have that same $200 level on Apple, right there. That's Apple, and that's the $200 level on Apple. Now, let's say we can sort of put some candles here, moving higher, breaking out over that level, right? Continuing to push higher. So we have those candles, just let's say 5 green candles in a row. No pullbacks, no nothing, just ripping through that level, right? A lot of people will start to chase. Right? Chasing at the highs because they're like, oh my God, Apple's going straight up. I need to start getting into this trade. I can't believe it, right? I'm going to miss this. that's all the FOMO and all the fear and all the not following a single strategy starts to come into play of why losses start to stack up. Now, that trader will enter here at the high, right? And you'll get a wick like this that starts to show you, hey, you're starting to get selling up there. You're starting to get some rejections coming in. And that's when you start to move lower, right? You start to see that pullback. You start to get those candles moving back to the retest. And at this point, a lot of these traders will start to stop out of their trade.
Yeah.
Right? Before the retest even happens, right? Before that retest even occurs. So they're pretty much just randomly buying, randomly selling, and we're taking advantage of those sellers at the end.
And then you got people trying to sell there as well.
You're taking advantage of these sellers at the end of the day. These people that are buying on chasing and pulling back, everyone that did that, everyone that was everyone that was a part of this trade right here that bought at the high, sold at this retest, that's our money.
Yeah.
That's the money we're about to take. Right? So we get back to the retest level, and something that I love to see start to happen, which I know is a rudimentary thing to look for, right? But it is very true in the markets, is what you would call a bull flag.
Yep.
Right? So this is our bull flag. That's our pullback, the retest after the breakout, retest, bull flag, right? And we want to start seeing the action here, all in the battle zone, right? All right there is where we get paid, right? So we want to start seeing stuff like this. Wick maybe below, wick back above. Maybe we have a candle that sticks right above it, right? And starts to break out of that bull flag. Then eventually what you're going to see is you're going to see a candle that engulfs that previous price action, right? And then we're taking our long position right here.
Gotcha.
Now, the next thing I'm going to talk about, and we'll go ahead and erase this again, and then even get more minute and more detailed about right there.
Just before we do,
go
in
ahead.
terms of if price was to, in this area, happen to close here, right?
Yep.
Just close there.
Yep.
But then trade back above and sort of trade around this line. Is that fine?
It's still a valid thing to look for, right? It's not like we're ever just saying, oh, it's, the only time I would ever say trade's not going to...
If you get the opposite,
right?
If what you're looking for.
Exactly. If you get a candle like that, that clearly rejects it, right? And then let's say, for example, the S&P is also rejecting a major supply, or the NASDAQ's rejecting a major level. Okay, we waited. We never got our confirmation. Retest didn't work. No trade.
In this example, so no trade.
No trade.
So you're not going to look to short.
Well, yeah, if you want to go... yes, so exactly. So what I would start to look for in this case, if I am interested in now looking for a whole market rejection, right? At this point, if I'm going to flip this, I need to now be finding a thesis as to why I would look to short the market.
Got you.
Right? So we can get into this, but let's use this area on the chart. So let's say you're getting the S&P starting to reject a major supply, which then correlates with a breakdown of this level on Apple, right?
Yeah.
So then, okay, right, we're saying, all right, S&P 500 starting to very clearly reject one of our major supplies. Now, the question is, can I really set up a short here, right? Or do I have some levels below that I really don't have interest shorting into, right?
Okay.
Yeah. Is there, let's say this is the opening print. Let's say there's a major demand here on the ES, right? So sometimes, and this is what we're going to talk about, the no trade zone, right? Their next concept is no trade zone.
Sped ahead a little.
No, it's okay. So let's say this is my no trade zone. Let's say this is the overnight high, right? Let's say that's like a previous day high. Let's say this is the previous day low, or like the opening print.
Gotcha.
So what you'll often see is, right, you'll get that rejection. You'll come back down to the opening print, and then you're going to bounce again.
Yeah.
And in this case, if this doesn't align perfectly, you might maybe look for that quick rejection, the retest rejection.
Yeah.
But then if that ES holds, you're going to get sort of wicked back out of that trade.
Got it.
Right? So for me to flip my thesis, I need the S&P and the NASDAQ to align as well. So in this example, if I wanted to short this 200 retest level after a rejection or a fail, I'm also going to want to see the ES failing under that morning low or morning open. Right? So there's more confluences to just that actual chart. I'm starting here just so we sort of understand the actual price action of what we're looking for.
But so now, I'm glad we asked just to clear that up.
We'll get over that deeper.
For sure. But now we're going to go deeper into that, right?
Let's go deeper into that. So what we're going to talk about next is we're going to talk about how to set up our risk using the break and retest, right? Because with options, it can be difficult to know our exact dollar amount risk. It's a very difficult thing to do. It can be quantified through delta, reading how much, what the delta of your contract is and how much risk on the underlying stock you're risking. So you can quantify it. It's hard to do very quickly, right? Because you have to do very quick mental math. But it is possible to quantify. And really, you're really wanting to understand how many points on the underlying am I risking, right? And if you're trading, what you want to be looking for is how much of underlying risk on the stock am I going to risk, right? How much underlying, basically from the 200 point to where I enter, what is that gap, right? So let's say we put that 200 level back, right? And let's say we just got our bull flag breakout. Let's say that was our bull flag. We just got our candle that engulfed the previous action, and we got our bull flag breakout, right? So this is now, and we'll use the green marker to indicate our entry point. So right here, let's say we go ahead and enter the position right there. That's our entry, right? So let's go ahead and say that's $202 on Apple, right? So right now, if we enter there and our retest level is 200, this is now called an invalidation line, right? So I can use So I can use the red marker and say, okay, 200 is now my invalidation. Validation.
I'm the same.
Invalidation line. So now our strategy and our structure here is I'm long Apple off a 200 retest, right? So we can sort of map this out. I'm long Apple, right? Off the 200 level, off 200. Now my stop loss or my invalidation is a close or price action that starts to clearly show me that it's rejecting 200. Right? If we start to see candles rejecting back under 200, then I am out of that trade. My stop loss is now under 200. That's my invalidation line. My first target, my PT1, is always going to be where that previous breakout high was, right? So let's say our breakout high was up here at $204, right? That was our breakout high before we got the retest. So that is now my first target for a scale off, right? And it's a scale off. It's only a scale off because we want to look to see if we can hold runners here. So our first price target is that 204. That's our first target. And what we're actually going to do after we hit that price target is we're now going to look to see if that previous high of day now becomes another break and retest continuation.
Scale in.
Right. And so we can either add or we maintain. Right. So what we can now put here, right, and we'll use the green marker, is we can sort of quantify our risk reward, right? So our risk reward here, here's our reward. Our PT1 reward is up to that 204 high. Our risk for that first part of the trade is a close below or a clear rejection back below that 200, right? So that's our first risk reward on our first price target. Now, we go deeper here, right? It gets deeper and deeper as we go on. The reason why I will look to take some off at that high, right, is to reduce risk, right? Because there's a very high chance that we could push back higher, reject the high, double top, right, see another rejection, and come back down and we take a full loss. Is it necessary to take a full loss if that hit that high a day? Is it necessary to allow that to, or is it necessary for us not to take something off the table to at least, whether it's going to be a win or not, at least we're taking something off, right? And so what I'll typically look for is I'll take a quarter, right, or almost sometimes a half of my position off, 2/4. Let's say I have increments of a fourth. Let's say I have, let's call it 20 contracts, right? Let's say 20 options contracts. So I'll take 5 or 10 contracts off at that high. Right. And that's typically, it's different. It's going to be different in every situation. I would say that's typically anywhere between a 15 to 20% win, right, on an options contract. That's like a very comfortable estimate, right? So we're up around 15, 20%. We caught the beautiful break and retest long. We had a nice risk. We got our 15, 20%. We're taking half off. We can lock up some profits here. And now let's see if this thing can run. All right.
Let's take a break for a minute there, guys, because I want to tell you about our preferred prop firm, Apex Trader Funding. Now, Apex is no stranger to the podcast or even Chart Fanatics because we've done 2 incredible episodes with 2 record holders in terms of Trader Kane, who got a record payout at $2.3 million at Apex. And then beating that record in the end was JadeCap, aka Kyle, who also then has a record payout now of over $2.5 million in a single payout with Apex. And that really just shows the infinite possibilities you can achieve at Apex Trader Funding. Now, what traders love about Apex is that you can get up to 20 accounts. So whether you get the 25K account ranging all the way up to the 300K account, you can get 20 of those. So if it's 20 300K accounts, that is 6 million in tradable capital, which is absolutely incredible. Not only that, it's only a one-phase evaluation, there's no daily drawdown, and up to $25,000 per account is 100% yours. And after that, it's a 90% split in your favor. That's right. At Apex, you can actually trade with Wealth Charts, Tradeovate, and Ninja Trader, so you can choose your favorite trading platform. And not only that, you will actually get real-time data included when purchasing your evaluation with Apex. What I personally love about Apex is that as long as you're trading your day-to-day strategy, you don't have to worry about trading the news. You can actually request your payouts every 8 days, and there's actually no cap to your max payout, which really shows the infinite possibilities you can have at Apex. Thanks to Chart Fanatics, you can get the best offer available at Apex. They are always running sales. So make sure to use the code CF that will automatically give you the best offer available at Apex. The link for Apex Trader Funding is in the description below. So click that link, use the code CF, and you will get the best offer available. Become an Apex trader today. Now let's get back to the episode.
A very big thing here to realize and to recognize about this example is when we do this, this is a form of risk management, right? So of course, we're going to want more than 15 to 20% to have like spectacular risk reward in the long term.
Of course. Yeah.
Right? But we don't always get that. And why not grab it, right? And let's make it so if we do pull back and reject, that is not a now 20 to 25% loss. That's now a break-even trade.
Gotcha.
Or that could even be a profitable trade, right? If we scale out at that high, it could still become profitable even if we do end up getting stopped on runners.
Yeah.
You're playing the long game, right? You're understanding the variables that are going on here. You're understanding that there's a lot of risk in play, and you want to at least take something off there, take some off, and understand that, okay, maybe this one doesn't really go for me, the 40, the 50, the 60% runners, but at least I'm now being able to sit back, relax, and let this play out.
Would you say two things? One, these are the sort of trades that will pay for losses and also pay for sort of dynamic sizing if you want to down the line, in terms of having like, you know, a buffer in your account.
Yes.
But then secondly, are these quite fast trades in terms of the execution because it's 2-minute time frame?
Yeah, I would say these are relatively quick trades. I would say from the time that a really good retest trade sets up here and goes to that high is probably 10 minutes.
Amazing.
Right?
Yeah.
Maybe like 5 2-minute green candles.
But it feels longer when you're when you're in the moment, and then that's why you know, to your point, for this particular setup to sort of scale out even just a partial is to pay yourself and sort of, as you say, take that ease back.
Exactly.
This whole period could take about 20 to 30 minutes, but during that time, your mind is
absolutely
firing off.
Yeah, this area is the most difficult for traders, right? Because it's very hard to trust yourself, and
that's why it's the battle zone.
Right, and it really is. And so when you come back to here, it's very unnatural for some people to be longing something and being interested in longing something as you pull back.
Yeah.
Right. This section right here, when we're retesting, is when I am coming up off my seat, right? And I'm like, oh, here we go, right? This is exactly what I need to see, right? Before that, I'm like, oh man, another breakout. Is it going to come back for us? I'm not going to just chase this thing. Let's wait to see if we get that retest. And so that's when you start to really got to lock in, right?
And these are the differences that make profitable traders versus the unprofitable traders.
I would say, yeah, I would say.
Rather than panicking or rushing or chasing,
right?
And equally not trying to sell. Some people, because they think it might be a fake out, start to sell it down.
Yeah.
When in reality, you just got to sit and wait for your confirmation rules to play out.
Yeah, I mean, and we can quickly, I want to touch on one last thing and before we can start to talk about flipping this. These trades, like you said, you made a good point. These trades pay for the losses, right? This scale out that ends up being break even, or this scale out that ends up being slightly profitable, is paying for the losses, right? It's making it so those losses are smaller. It's it's giving you that buffer.
Yeah.
Right. And when you can sit back and relax and not be panicked about the position size you're in, is when you can start to very vividly and very clearly watch price action. And then you'll start to see something like this start to happen, right? Another breakout of this high, then another break and retest, right? You're still in the trade. It goes higher again, right? And now you're up 50%, right? And you're continuing to scale off at your discretion.
Yeah.
We talked about this yesterday with Carmine, right? Because I've been hanging out with Carmine this whole weekend, and we've been talking about discretion versus strategy.
Gotcha.
Right?
Yeah.
And so the strategy, this area is where pure strategy comes into place.
Yeah.
Right? When you start to break through the highs and start to really seeing price action move is when a lot of my discretion comes in, right? Because I can then read this price action, right? Is it still strong?
Yeah.
Am I reading rejections, or am I seeing just continuous movement?
It's almost like the bonus money.
That's the bonus money. This is the money that makes the difference, right? If you can get this trade to go 50, 60%, that's the account changing trade, right? This is like the entry criteria that you have to follow to catch it. Yeah, to catch it.
Love that.
Yeah.
That's incredible. No, that's a great way of framing it because, I've not really heard that sort of detail when it comes to the discretion side. I have, to be fair, always sort of reflected that the trade management a lot of the time can be the discretion, while the execution and the process is actually the bit that needs to be more mechanical and sort of fixed.
Yeah.
But I love it because you can see the risk management side.
Yeah.
We pay the losses with the small wins.
Right.
But then if the small win turns into a bigger win, as you see in this occasion, because again, the other option is obviously if we did manage to scale in as well.
Yeah.
If you were to scale in, that's a good question. If you were to scale in, you're following the same process again.
Exactly.
Right?
Just right here.
Just right there,
Right.
following the same process
Again,
to the
right
high.
there, just continuing to drive it higher. Right.
How often does that happen for you? Is that something that's sort of infrequent?
So this happens when you have a trend day.
Yeah.
That's the only time it happens, right? And so there's sure, this is a great example, but there's so much more to really dive down into. And we really talk about that in our group. Like the S&P and what the NASDAQ is doing during this time is just, even as important as this.
Yeah.
Right? Because if you're not watching the NASDAQ and S&P during this time, you're
It's as you shown.
you're basically watching it. Yeah, you're watching with one eye closed.
Yeah.
Right. You have to. I got my charts set up. Top left is always the futures, and I'm always like this, right? Just like looking up at that ESNQ to make sure that it's still following along with,
of course, like
right, what's going on here.
Yeah.
Exactly. So what we can do is flipping this to the bearish side. If you want to get into that.
Of course. Yeah.
Okay.
Yeah.
So we
Shall I
can
wipe it all off?
Yeah. Go ahead. So we went a little bit about risk. We talked about the entry criteria.
Should we get rid of this as well?
Yeah, we'll keep that. We'll keep the battle zone. So now let's talk about flipping this. Or let's just go ahead and talk about a break and retest rejection.
Yeah.
Right. And so how do we look for this, not only to the long side, but how can we play this to the downside? Because we're going to have really good examples of this later on in the podcast about retest rejections. And actually, me personally, these are better. I like retest rejections. Downside is like an elevator. Upside is like an escalator, right?
Yeah.
So when that downside starts to come in, it just starts to flush. And these can be some monster trades when we get this. So same concepts, right? Let's say we have a pre-market low, right? A pre-market low, or even a previous day low, right? Previous day low. Let's just go ahead and use previous day low as our example, because the breaks of previous day lows are the nastiest. So when we have a previous day low here, let's say that is, let's use the same 200. 200, previous day low. And let's say the previous day, we traded down into that. We bounced after hours, right here. Next day. Now, so let's say there's two examples here. Let's actually go ahead and let's do a little split screen here, and let's put both of them on the screen side by side. Same examples, but the pre-market did something different.
Yeah.
So here's example 1, and here's example 2.
Gotcha.
All right. In example 1, we open the day above that previous day low, right? In that example, we have to be super, and I mean super cautious of shorting back into that previous day low. Yeah. That is some of the worst trades that you could take, right? Because you get that morning trap, you get the little morning bear trap, wicks off the low, just rockets higher again, right? This is where a lot of traders gets messed up, right there. So for us to even get interested in a trade, if we're opening this low and this close to a previous day low, we need the break below that low. We need the retest of that low. Now, before we get too deep into that, I want to talk about section 2 and sort of keep them up to date. Section 2, or example 2, is we go ahead and open the market below the previous day low, right? And if we break, this is the best trade ever right here. And I'm like, I get smiley. I mean, I remember plenty of 6-figure trades, 5-figure trades, just thinking about this, right? So if we open below that previous day low, and if what you're looking for in the morning, I want to make this even cleaner. What you're looking for in the morning is a morning rally straight into that level. And I mean like aggressive. I want to go vertically higher. I want people in Discord chats around the world saying long this thing. Like, I want to be long. It's going straight up. Like, look at Tesla straight up, right? That's exact like just behavior I want to be going on there.
Right?
You
want to see a lot of volatility, momentum in that period.
Straight up into the previous day low. And then you get this right here. You get a huge wick candle, right? Leaving behind a huge tail at that previous day low, candle closing red, right underneath that level.
Yeah.
And then you know we're about to make some money, right? And so what we do here is we set up that same risk reward, right? And same thing, the battle zone, same exact thing, right? Stop loss above that previous day low, right? You're looking for the bear flag, right? This is now a bear flag.
Got you,
right? Because that's a bear flag up into that high. You're looking for a candle to engulf that price action down below, and then you got your breakdown. Right.
So is the entry here?
The entry is so the same. I mean, I can get, if we want to go full screen, and I might have to get a little bit bigger on this, but entry is when you see, remember those two candles, let's say you get some candles here, right? That sort of just stay sideways. Go ahead and make this a little bit cleaner for you. Let me go ahead and make it perfect. So same thing, right? Push up. Candle rejects that high.
Got you.
Right? Next few candles, let's say we have just sort of an inside candle. Let's say we have maybe we have another attempt higher. Right? And something that's hard to explain here on a whiteboard is like the live action.
Of course.
Right? Because like this candle could come and trade up here within 2 minutes, but then it could close still below it.
Exactly.
Right?
So in real time, it's that thought of like, oh, we're going to invalidate.
Right. There's some intuition. There's some discretionary reading what's going on, no doubt. Right. But you know that you're going to be focused on what's happening at this level. Right. I think it's easier for people to read price action when they're just focused on this. Right. They're not thinking about 1,000 different things. Let's focus in on this. Right. And read those candles. So let's say another candle trades up. Wicks back lower, closes again, right? Leaving a huge tail like that.
Got you.
Right? If I'm looking at 5-10 minutes of this kind of action here, we're taking that trade all day. I don't care if this thing reverses back up. I don't care what may happen. We have to accept that uncertainty. Right? We have to accept that there's possibility of us being wrong still. But we have absolutely seen what we need to see to take an attempt. So we're going to trade that bear flag, right? Let's say it's bear flagging. And once we get that break of the bear flag, once we have that clear, consolidation range here, we're going to go ahead and take that entry.
Got you.
Right? Stop loss above that high. I would say we need something along the lines of this, right? Really showing us that we're going to close above it.
Okay.
Right?
So would you put it above this high?
Yeah, I mean, I definitely would want to monitor those wicks, right? But if I start to see some very clear action holding above this, then I'm absolutely needing to now accept that, hey, it looks like we've reclaimed that level, right? That's a reclaim of the previous day low. Right. So that's an awesome setup.
100%.
For this one, same thing. We just need to wait for it to break. We cannot short into the low. We need to wait for the actual break, right? And then that same action we saw here off the open is the same thing we want to see here intraday. Aggressive back up, heavy failure at the previous low, bear flag.
Back down.
Retest. Yep.
Got you.
Yeah.
Perfect.
So that's the core of the break and retest, both to the upside as well as to the downside.
Perfect.
Let's talk about the no trade zone and how this comes into play really to find those retests. So we'll go ahead and take the battle zone off.
Yes.
And let's talk about something I like to call an NTZ. NTZ, which is the no trade zone. right? So on the no trade zone, let's go ahead and say we have a previous day high right here. This is previous day high. Previous day high right there, right? So we go ahead and trade back lower maybe. Here is our after hours and our pre-market after hours in that day. So we're going to put a little dotted line across here for the previous day high. We're also going to take a pre-market low, right? So let's say, we're trading like this, and then we trade within, let's say that's our pre-market low, right? So really the concept behind an NTZ is I want to be able to understand where is the price action going to be the most difficult to read. Where is it going to be very tight? Where's the channel going to form? Where are the fake outs going to come in? Yeah. Right? Where is the area that I don't want to trade within? Which is really at the core of it. The no trade zone should also give us our break and retest levels. Yeah. Right? Yeah, so if we have a no trade under previous day high and a no trade above previous day low, pre-market low, then that's really our break and retest rejection or our break and retest long ideas.
In between there.
Right. And between there is where so many traders just absolutely blow up their trading accounts, right? Because the market opens, we're here, we're there, we're here, right? We're here, we're chopping. Nothing's happening here, right?
And even worse, well, maybe not worse than blowing up, but what can also happen is they're getting long, or they're getting short.
Exactly.
They're holding it. Yep. And even by the time it does break out, let's say in their favor, they probably got out.
Yeah, out because they're either tired of staring at it or they're taking zero.
And they'll chase after.
Exactly.
It has broken retest, they'll chase after.
Oh my God. Reverse. Exactly. Yeah. And I mean, Riz, I'm here as someone that's done this and successful, but I have done that same thing.
Exactly.
I mean, I know exactly how that feels. I've done it, right? I'm not going to ever say to someone that I have not done that.
Of course.
That is absolutely things that I've done. And that's the only way I've been able to build this playbook and these ideas to, stay away
diving
from.
deeper and learning from your data and your patterns that you recognized.
Exactly. So we have that previous day high, we have that pre-market low, right? Whatever it may be, maybe it's a previous day low, right? It's not always going to be exactly previous day high, pre-market low, right? And I think that's where a lot of discretion comes in again, right? We have to know, what's the chart look like today? Where's a very clear low from the previous day or the pre-market? Where's a very clear high? Maybe it's not even previous day, right? Maybe it's a level from a few weeks back. That's a very major supply, right? And that's actually a really good example I have today. So we want to get an idea of where our no trade zone is. A joke that we make in the group all the time is, I'm long, I'm short, I'm long, I'm short, I'm long, I'm short, right? And then you just keep taking 1,000 trades within this area, and it's just a disaster. So what we need here is we need a trade outside of the NTZ. We need to break, we need to retest, we need to turn previous day high into a support and start to trend higher.
Get back our original model.
Exactly.
Over.
Yep. So you can see how that's a perfect market structure.
Yep.
Right. Look at the market structure there. You have this zone, then your market structure is now higher, right? And these are the points where you're looking to take that trade, right? And you're just structuring this thing higher, and you continue to follow it on a beautiful trend day. And we don't always get this trend day, right? But the best thing about giving yourself an NTZ is that if it's not a trend day, you're not trading, right? And who cares if you don't trade in that? Right. Exactly. If I look at this day right here, and I'm, it's today, today's not a bad day looking at the action. But let's say today was just a total sideways day, and I'm here on a podcast, and, I look back at 4 o'clock and I say, oh man, thank God I didn't even look at the charts today. Right. So if we're looking at this, for me, if it's 12 o'clock, if it's 1 p.m., and this is still what the market's doing right here, that's it. I'm out. I'm not going to sit here all day.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZeller. TradeZeller is the #1 trading tool in the entire trading industry. TradeZeller allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a Forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZeller, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZella and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZella. So you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now, you can actually get 10% off your monthly subscription using CF10 on TradeZella right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZella. The links for TradeZella are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
I was about to say about timing wise.
Oh, yeah, absolutely. I mean, you can't sit there all day. You can't wait for it all day. I would say the quality of these plays start to deteriorate as the day goes on.
Of course, yeah, because then your volatility and your volume's going.
Exactly. So that's the no trade zone. This is a new concept that I've been really focused on, right? Even
helps you just reduce unnecessary
time,
energy, and
trades. Yeah, exactly. Even 12 years later, I'm still thinking of ways to make this more precise.
I think that's the difference, right? That's what makes the profitable traders, that they doesn't matter 12, 15, 20 years, they'll still go and look to optimize and find ways to be better.
Absolutely.
And in that case, it's not even a case of like trying to find more trades. That's the opposite.
Oh, let's find less trades. Yeah. Let's avoid this, right? Because the more you can avoid that, the more
that's
profitable.
The most powerful one. I've always said that's the ultimate hack: is how do you avoid the low quality trades? Because now you make more money without taking more trades.
Without more effort.
Yeah.
Right. Exactly. So the last thing I think we'll talk about on the whiteboard before we jump into the charts is I like to call it the big four correlation. I don't use the fancy terms that you hear a lot. I think it's pretty much the same thing as SMT.
Yeah.
Right. Big for me, I call it big four correlation because there's, big four sort of comes from an accounting firm. I just think I wanted to be investment banker, accounting. So big four is like all the big accounting firms. So big four, which for me, the big four is NASDAQ, right? NQ futures, S&P 500 futures, right? The SPY ETF and the QQQ ETF, right? So I'm watching all four of these every single day without a doubt. They're in the same chart. They're in the same chart every day. I press one thing on TUS. I got a 4 square on TUS. They're in the same spot every day, right? And I'm just becoming a master of reading these four together because you absolutely spot discrepancies between these four every day. If you know what you're looking for, you find those SMTs, you find that they're not correlated at times. So a quick example, which we'll get into later on the chart, is what happened actually last Friday. Okay. So last Friday, the 25th, I took a losing trade. This was a loss that, could have been avoided, but I did like the setup. I felt like it lined up with what I wanted to look for, but there was a very clear reason as to why it failed. And it was to do with the big four correlation.
Gotcha.
And so I want to quickly show you exactly what happened here. So let's split this in half by the NASDAQ.
And that was the 25th of April for anyone at home.
Oh, what did I say?
No, you said 25th.
Oh.
25th of April, just for anyone who's wondering.
Yeah, 25th of April. So we have the NASDAQ and the S&P 500 futures. So we had a pre-market high on the NASDAQ futures right here. Right? We moved lower. And then later in the day, we broke above that high and started to look like we were holding above it. Right? This was exactly what the NASDAQ was doing. At that same exact time, we had an S&P that had that high, moved back lower, right? Moved back higher, and rejected an equal high here, like that, right? And so when you spot this, right, this can be very dangerous and very difficult to trade, right? Because the question mark here is, does the NASDAQ hold, right, and bring the S&P with it?
Yes.
Or does the NASDAQ fail back under, right, because of the S&P failing?
Yeah.
Exactly. And so typically when you see in a situation like this, where the NASDAQ's above a high and the S&P is below it, some would call that a bearish SMT, right? So this is a really good sign of, okay, ES is rejecting that high, NASDAQ's above it. We do not have a reason to long the market yet here because of this discrepancy. And I did make the mistake, full transparency, of longing the QQQ because of this retest. I slipped up. I didn't spot that, right? And that was my own mistake. But this is where going back into my trades, right, putting them in TradeZella and seeing that was like, okay, this was a bad mistake. I understand why it happened, which is extremely important, but it was something that I did wrong, right? And so what ended up happening, I took that long, it fell back under, I got stopped out, S&P, very clear double top, and that's a bearish SMT that happened just on Friday, right? So in this situation, we need the S&P to also be doing the same thing as that NASDAQ, right? Breaking and retesting above to go ahead and, take that trade long. Without that, we avoid the divergence.
And again,
the
kind of
fake
back to the no trade zone of helping you reduce losses as well. In this case,
the ES was still in it.
Yeah,
the ES was still in the no trade zone, right? But below our no trade zone, so it should have, right? It should have been an indicator for me not to take that trade.
And that trade was though on QQQ, was it?
I basically, instead of longing the NASDAQ futures, I took some options on the QQQ.
Gotcha.
Right. So the NASDAQ, the QQQ was showing pretty much the same thing.
Gotcha.
Yep.
Yeah, perfect.
Yeah.
That's great. So we go over the pros and cons?
Yeah, let's do it.
And again, for everyone at home, cons-wise, it doesn't mean it's necessarily a bad thing. It's more so something to be aware of, something that could be a hurdle, and something that you just need to know when looking to implement something like this. That's all.
Absolutely. So let's start with the pros.
Yeah.
We'll start positive.
Yeah,
start with the pros.
Best way.
So I would say some big pros of the break and retest is that it teaches patience, teaches the ability to, or the importance of not having FOMO.
Yeah.
Right. Because if you trade the break and retest, you cannot have patience. You need patience, and you definitely cannot have FOMO.
Yeah.
Right. Because you need to wait for that retest to come in.
Yeah.
So it really, really teaches that, and if you're not implementing this when trading the break and retest, you're going to find that you're losing every time. Right. So that's a really big pro for me. Right. And has really helped me stay patient in my trades. Another big one is I think it's quite basic. Right.
Yeah. I would say
right.
So, yeah.
And that's something that I get a lot from people online. It's quite basic. Right. But it works. It absolutely works. There's a lot of ways to complicate it. There's a lot of ways to make it sound more difficult than it is. But it's just simply how the market trades. You see it all the time. I mean, even today, we had an absolutely perfect break and retest of 19,400 on the NASDAQ futures again today. And I would not be able to have action-packed and high-quality content every single day if this didn't happen every single day, right? So every day I can wake up and be excited to go on the live streams and show them another example of the break and retest, right? And so it's happening all the time. It's about spotting it and staying patient for it. And it's quite basic to understand.
Yeah.
Another major pro I would say is it is structured, right? There's structure to what you're looking for.
Yeah.
Right. You're understanding exactly how to structure that entire thing out, right? Sort of mechanical in nature.
Yeah.
Yeah. So I would say another pro would just be that you're really focused in on reading the price action. It's a really great way to start to read price action, right? Because you know exactly where to read the price action, where it's important, and that's the battle zone, right? Something that I think a lot of traders do is that they're reading price action all over the place every day. There's only so many places that you really actually need to focus on price action, right? So instead of, from the 9:30 open to the 4 o'clock close Eastern time and watching every candle that goes on all day, which is just going to make you numb in the brain, like just can't do it. You know exactly your shots. Like, where is it that I am going to pay attention, right?
Yeah.
Where are those areas on my chart that I'm going to pay attention to reading the price action, right? I think that's a really big pro. It avoids a lot of noise and takes away unnecessary things to focus on. Okay? So those, I think, are some of the major pros, right? You have to be patient. It teaches patience. You can't have FOMO, or you're going to take very bad losses. You're going to take poor entries and you're just going to get pulled back on.
And I guess the potential as well for the outlier trades, the trades that can go and make high P&L.
Exactly. Yeah, I would say that would be another great pro, is that you're in a trade, you know where that stop loss is, you know how important the hold that you entered on is.
Yeah.
And if that continues to hold, then the running potential of your trade is very high.
Yeah.
Right? Because as long as it's above that 200 level, if we go back to the beginning of the video, as long as it's above that level, you have potential to reach new targets and maybe previous highs from previous days. And so there's absolutely like an exponential growth to it. Definitely. If it's correct, right? So let's talk about some cons, I would say, of the break and retest. And the first one that really comes into mind is you have to have confidence.
Yeah.
So the reason you have to have confidence is because to really squeak out the most percentage points out of the strategy is you have to be entering where that retest level is, and sometimes before it feels right to enter.
Yeah.
Right.
Yeah.
So I would say you have to have confidence in what you're looking for, right? Because when we were talking about that example, when we pull back to that retest level, price action is usually coming down in that situation. It's starting to look actually aggressive to the downside, right? And so, new traders may feel like, okay, that's bearish.
Yeah.
That's not bearish, right? It's the retest you want. It's the pullback you want. And so if you're going to get a good entry, because it's so precise in that 2-minute, 10-minute time frame, you have to be entering close to that invalidation line, close to that level. If you let that go too far higher, right, or too far up, right, and maybe if you're watching a 10-minute candle or a 5-minute candle, by the time that 5-minute candle closes, you could now be, right, instead of being at $200 on the retest level, you could be trading at 208, right? And you can't take 8 points of risk here.
Yeah.
Right? It's too far away. So you have to be able to find that execution.
It skews a risk to reward.
Yeah, to make sure that your risk reward is correct. If you're having problems being confident and you're having problems executing, that could be a big con.
We say speed as well.
Speed, right? Yeah, absolutely. You do have to be fast, right? I definitely see, and to be honest, I see a lot of people that sometimes try to copy my trades, right? Just being fully transparent.
You have the speed.
If you're not fast with it, this is not a strategy to be, just, what's Desi and let me go copy it, right?
It will skew the risk.
Exactly. You need to learn exactly why I'm looking at this, right? You need to be in it right when I enter, right? Or even before me, or it's got to be very quick.
Yes.
Right. And so this is why something in my group is I don't text any alerts because I know that if I text alerts, by the time I text it out, it's changed, right? And so I'm not going to pass that information along to someone if it's not even something that I'm interested in anymore, right? So you have to be fast, which a con maybe to some is that you actually have to learn it.
Right? I guess so.
Is that a con? I don't know. Maybe it is.
But for everyone. Everyone. No, but I like that.
Yeah.
But in terms of speed, is there anything you have to have done outside of just the norm to improve speed or like optimize speed?
I would say you're going to have your broker ready to go, right? You're going to have that options chain ready. You got to start to, you have to understand what's the contract I'm looking at, right? What's the correct contract? And we get deeper into, all this information.
As well.
Some mental math, but like, am I trading? I'm probably going to want to be at an at-the-money contract, right? I'm not going to want to trade a too far out of the money contract here, because if I'm only taking 5-10 points on an underlying, which could be big depending on the stock, but if I'm taking a small move on the underlying, if I'm too far out of the money on my options, I'm not going to get that move, right? I'm not going to it might not move as much, right? And if it goes against me, and if that's too far out of the money, then you're going to take a massive % loss, right? So I won't say it's a con, but it's just another thing to understand. You have to understand, the option contract that's correct for the strategy, which for me is the at-the-money contract.
Definitely.
Right. So you got to be confident, right? Is it a con? Maybe, maybe not. But if someone's not, then it could be a big con.
Would you say, is this strategy only for options, or can it be?
It's absolutely for futures as well. No, 100%. Like, we'll show you examples today. And I mean, I see break and retests on the NASDAQ futures, the S&P 500 futures all of the time. And actually, I would almost say that it's equally, if not better, on futures. It possibly is, right? Because with futures, you can absolutely quantify risk a little bit better, but you don't get that exponential growth with the futures contract, right? When you get that really big growth, the QQQ starts to expand, or let's say you're trading the options on the QQQ, right? When it really starts to run, those options are going to far outperform the futures contract, and get that expansion in percentage P&L. So
the only thing I would add then really is just what we're talking about is the discretion element. It's not really a con. It was positive and negative. Some people it might be a con for, but in reality, in terms of something to be aware of, is that when it comes to after the initial part, as we discussed, the entry model and the sort of first trade management section, when you hit TP1, after that, it's your discretion that's going to keep you in the game, which is something to be aware of. Because you will still need to, I would say, create some form of rule process of like if X happens, then Y, and so on. But it might not be as fixed as the original one.
Correct.
Well, is it chart time?
Yeah, let's jump into it.
Ready?
Yeah, absolutely.
Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with PropFirmTrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best prices. And that is exactly what propfirmtrader.com does. Propfirmtrader.com allows you to compare prop firms, be able to find the best challenge suited to your trading style, and get you the exclusive best discounts in the entire industry so that you're paying the cheapest price possible for your prop firm challenge. So on propfirmtrader.com, you'll be able to use filters to be able to do that and find the exact challenge for you, be able to find your favorite prop firms. On the futures side, we have the biggest futures firm in the entire industry with Apex Trader Funding, giving us the best discount possible. Right now, it's actually 80% off using the code PFT. On the CFD side, on Forex side, we actually have a broker-backed prop firm called Atmos Funded, backed by Torex, and they are giving an exclusive offer at 50% off all challenges. Again, using the code PFT. So make sure you go do that. And not only that, another exclusive offer only on Prop Firm Trader with another broker-backed prop firm, Blueberry, 25% off using code PFT25. While also on your first payout, you get a free double size challenge account. So on your first payout, you have a 100K account, you will then get a 200K account given to you. And on top of that, you can get an exclusive offer only on propfirmtrader.com with Alpha Capital on their one-step challenge, 25% off using PFT1. So make sure you go and do that. And there's so many more exclusive discounts only on propfirmtrader.com. It is the go-to site for all prop firm traders out there. And one thing I'm really excited about that I personally helped to organize was the giveaway of giveaways, the 7-figure giveaway, just through purchasing your challenges for the best price through propfirmtrader.com. Every single week, you will automatically be entered into an incredible giveaway, a collaborative effort across all of these firms on screen, between 100 to 200K accounts, over 7 figures. It means that one person every single week who's made a purchase through propfirmtrader.com will be getting 7 figures in challenges that could completely revolutionize your trading journey. Again, all you do is for any of the firms on propfirmtrader.com, use the code PFT at checkout, and you will automatically be entered every single week. The link for propfirmtrader.com is in the description below. Now let's get back to the episode.
Well, we got the charts out now. We've actually got some active charts that we're going to be looking at live.
Yeah.
And then some incredible trades to go over as well. So where do we begin today?
So today, I want to go ahead and show you guys some examples just that happened today. This is April 28th, Monday, around 3 p.m. of some break and retests on the NASDAQ futures, right? So you could trade this through the QQQ options. You could trade this through MNQ. You could trade this through QQQ, or I'm sorry, through NASDAQ futures. However you want to trade it, right? The break and retest is not solo to futures or options. It's a trading criteria. It's an entry criteria.
Gotcha.
It's something that you will absolutely 100% see during the day on the market. Gotcha. It's just, I mean, even us just sitting here, I just showed you 2 examples and they both worked.
Exactly.
Right?
Yeah.
And so, like, if you can spot these things throughout the day, you can absolutely be correct. And if you follow the structure correctly, you can manage risk correctly and profit take correctly. So the first thing I want to talk about here is this low right here that came in the overnight session, right? So Sunday futures open,
Yeah.
right? And you can very clearly see that we held that level, right? So I'm going to go ahead and zoom into this to get this even more closer and just to understand what happened at this area. So we can see very clearly that we had a very clear low that came in here. I'm going to make that green, right? Very clear low. This was actually also a very clear rejection from Friday's price action. Right? So we can see that's a very clear level. Even right there, a clear hold.
Exactly.
So 19,395, 19,400, absolutely a level of interest. Right? That is now our level of interest. We can very also clearly see where our no trade zone comes in. Right? Look at this. We have this overnight high. We have that 19.4 low.
Yeah.
So what do we have? We have our no trade zone. Right? So we don't want to be trading here. This is our NTZ. Not interested in the NTZ. Actually, a beautiful rejection of that high, right? Could have traded that supply rejection. Nice, right? Very clean. I'll sometimes look for that as well. A little bit outside of the break and retest strategy.
Yeah.
Maybe a little bit more discretionary or just looking for a previous level of rejection to happen again.
Yeah.
But I'll actually in a second show you where that 19.6 level comes from. It's not just this high. It comes from a few weeks back.
Gotcha.
So what happens today is you trade within that no trade zone, and eventually it looks like around 11:15 you have a clear break under that low, right? So it looks like on the 15-minute chart, it just sort of breaks back under, just straight down. And where do I find an entry on that? Well, we need to go ahead and break this down to a shorter term time frame. Right? And so what we can see here is we go down to the 2-minute chart. So on the 2-minute chart, we can see that we still have those lows right there. That was the lows we just talked about on the 2-minute chart. Right? And let's go ahead and zoom into this. Right? Let's zoom in just to where this happened today. And let's talk about just how beautiful this was on the intraday today. So we have our 19.4 key level, our inflection point that we just talked about. We even see right here an attempt of a hold, right? And that actually makes me even more interested because you had some buyers that tried to hold there, pushed higher, actually rejected these lows, which is actually quite nice, like a little bit of a rejection of those lows. That could be a break and retest in itself, but that's still in the no trade zone, right? So it's not as significant. Absolutely, that's perfectly said. It's not as significant, right? And so what happens? We come back down, look at this candle, big breaker candle, right through that level. Now, do you chase this? Me, no, I don't. Could you? I'm not going to advise it, right? Was there money to be made there? Sure. Right? But that's not a trade that I'm going to advise to go ahead and chase.
That's just the break.
That's just the break. So what do we need? We need the retest.
That's right.
Where's the retest? It's right here. Look at this right here. That's your retest. And that's the oh shit moment, right? It's like, okay, it's time. Right? It's time to start looking for the retest. Right? So we had our 19.4 level. We broke below it, right here. We broke below that level. We're looking for the retest, and it starts to come in. Now, what do you notice about those candles at that retest level? Right? You start to notice some of those upper wicks on that candle. Right? And so, actually, this is a fantastic example of how it didn't work instantly, but guess what? It still stayed under your level. Right? So this is actually a really great example for the video today is, okay, we had the bear flag, right? We had the bear flag break and retest, which is right here. Break, retest, and maybe someone went ahead and entered right there, right? Because that's what we just talked about. Now, where's the stop loss? The stop loss is above this candle high, right? And back above that reclaim level, right? And what did it do? Sure, you went into some drawdown here, right? On a big candle. Sure, you went into some drawdown, but did it ever break above? No. It never broke above, and that means you stay in the trade.
That's right.
You have to stay in the trade. And that's when drawdown is just, it's irrelevant. You have to accept this risk. You must accept this risk. If you don't accept this risk, this is when you say that the break and retest doesn't work, right? Because they say, oh, Desi said the short here, right? And to put a stop loss over this high, right? And I got stopped out and took a loss on this trade. Well, did you follow the strategy?
They follow the process. This is why it's step by step.
You didn't follow the strategy. You didn't stay in the trade. It still was below that level. So what ended up happening? It rejected again on a double top rejection, and it ran for almost, give or take, right? What is that? Almost 100 points to the downside, from 400 to 265, right? More 130 points to the downside. And that's a huge trade on some NASDAQ futures, right?
Now, in terms of the process we went over, is the first TP the low of the day?
The first, exactly. So the first place I would look to take some profits is right here at this low right here, right? So I'd put that line there, and I'd go ahead and take some profits off right there. Right?
In this scenario, for example, the remaining that you're holding, where is there anywhere in this scenario where you would end up taking more? Or does it not really hit a level for you?
So absolutely. So where I would start to exit more is the 50. I personally like to hit that every 20%. I'll take another little stab off. This is sort of discretionary. I wouldn't say this is some master scaling out strategy. It's just sort of discretionary in how I like to reduce risk. So let's say I hit 20% here, taking some off. Let's say I hit 40% here, taking some off, right? So I'm just sort of equaling out that curve and taking risk off as I go lower. Now, another big thing that I'm watching is what is the next level we're coming down into, right? Where do I have to exit this trade? So the next thing I'm going to focus on is where is the next level of demand? And where does the risk reward actually start to inverse against me, right? Where does it now become unlikely that we're going to continue lower, right? So where is that? Just from looking at this chart, it's pretty clear, right? It's right at the previous day low, right? So are we going to now hold full size shorts into previous day low? Probably not, right? You probably shouldn't be holding a full short entry as we start to come down into this low.
Yeah.
Right. So I have to do my job of knowing my levels and saying, okay, I've gotten a nice scalp.
Yeah.
I'm up 20, 25%, 30%. And I'm starting to get pretty damn close to that low a day from the previous day.
Yeah.
And I need to start exiting this position. Right. And so you can either take it all off, understanding that. You can run it down to one contract, but no trade's always going to just last forever.
Mm-hmm.
And so now, just looking at the last 2 days, we can even start to show ourselves an even larger channel, right?
Yeah.
We can now see that the last 2 days we have traded within the same exact channels, right? But we did find a very nice break and retest scalp underneath this low at the 19.4 level, which is quite nice. The next thing, just to even, now we're using real life examples here, we can see actually later in the day, which probably not a trade I would typically take, but what happened here later in the day off the exact same level that we just talked about.
Mm-hmm.
Take a look at this long that is actually going on as we speak. Right?
Yeah, literally happened whilst we were recording this video.
As we record this, we have a beautiful break and retest long entry. Wish I had the broker open and we took the trade. But you can see right here, right? We were talking about that 19,395 level, which tried to reject again, ended up not going lower, right? And what happened here? We saw a breakout above. We didn't chase the breakout at the high, right? We're not interested in the breakout at the high. We're looking for the bull flag to form. Where's the bull flag? Right here, right? We flag back down into the retest level. You can see right here. And look at this candle right there. That's the money candle. That is the candle. That's the battle zone, right? Our battle zone is right here.
Mm-hmm.
We need to understand what's going on at our key level. We move lower, we move lower, we move lower. That's fine. That's, again, the, oh, shit, we're coming back down. We're coming back into our retest.
Yeah.
What's happening at our level? Look at the candle right here. You can see we talked about, if we're watching live action, this candle at one point was red, right? Red down into this low. Wicked higher, turned green, taking our long right here, right? Long entry right here. That's our long entry. Our risk is back under this low.
Yeah.
You could even move it down into that wick low, right? I would say you could definitely use that wick low as your risk, right? And then you're targeting, I would say, at least to that equal high, which is about a 1-to-1 there. So it's not fantastic, but that again is where we take some risk off, right? If it works for us. And now look at the runners, right? Look at these runners. These runners are probably up. Oh, look at this.
And then every 20% you're
right. And look at this candle that's coming in as we speak. Right, this is a huge trade. I mean, if I pulled up the options chain, do you want me to pull up the options chain?
You can, yeah.
Let me get it situated first. So let's just talk about the 470 calls, and that was at right here. So if we look at the options chain, this is the QQQ today expiration contracts. And if we take a look at the QQQ long at that same situation, that's right here. They're around 65 cents per contract at that time, right? 65 cents per contract on that NASDAQ retest we just saw. And you can see right now, this trade is up 130%, right? Just right there. 130% on Q contracts. That's the great thing about options, right? 130% trade just on that, right? And we go back to the NASDAQ futures. I mean, that is literal perfection right there today. So, I mean, what an incredible example today, guys, of the break and retest live. And you can see it just continuing to run. And now I feel FOMO. Now I wish I was in this trade. But yeah, awesome example there.
No, it definitely is. It definitely is. And one thing I think is important to highlight is that no doubt there'll be people out there thinking, oh, but why didn't you get into that trade and hold it to like the end of day high, the weekly high, and so on. But I think obviously there will be those trades that end up doing that. But I think it's understanding, and similar to what we discussed with Carmine, is understanding your trading. Like what is your style? Like we are lower time frame and scalping and really getting intricate into the price action. And therefore the way that it's managed, the way that it's targeted, it reflects that. While everyone always assumes that you can do a scalp entry with a swing target and be the perfect entry with the perfect exit. It's not the reality.
No, there's some discretion to it.
Exactly. Maybe 2 to 3 trades in a year you get that. And they might be phenomenal and do really good things for your P&L. But overall, to think that you're going to do that consistently day in, day out, it's not a reality, right? And I
Yeah.
think, you know, no doubt probably early on you might have tried to do that.
Of course.
But through the learning, as you say, you developed a system that wins.
Of course.
And we're very grateful to be able to see it.
Yeah. And the last thing I'll say before we get into some trades is, like you said, there was only 2 trades today for me in terms of the strategy. It was right here and right here.
Exactly.
So out of the entire day so far, there's been 2 setups.
Yeah.
Right. And that's, shrinking it down into what's my criteria, what's my strategy, what am I looking for, and making sure I'm not just trading in a bunch of noise. And
that's more than enough, right?
It's plenty. I mean, 150% there. I don't know how much that ran on cues, but it must have been pretty nice.
Yeah, definitely.
All right. So we can go into some trades.
Yeah.
I guess we can talk about this Netflix trade. All right, so the first trade that I'm going to go ahead and review, and of course, this is a massive trade. This has been the biggest trade of my career. So I know they're not all going to be like this, right? We're going to show some losers as well. Yeah, of course. Hopefully, we beat this soon. But this was a massive trade. This was actually a swing trade, right? So switching it up a little bit here, this works on swing trading as well, right? Amazing. So there's setups that I'll look to swing trade the retest rejection, right? Same way, but just on a larger time frame. So we'll go over this one. And then we'll jump into some losers, some smaller trades, some normal trades. This one's an outlier, no doubt, right? This is not normal for me. This was a trade that I also put a decent amount of size in and risk, right? So you can see I risked about $35,000 on this trade. I put about $82,000 in the trade. So a pretty large size trade. It was a break and retest rejection. That was the playbook, right? The same thing we just talked about on the whiteboard. You're going to see it's the same exact concept, what we just looked at, right? So let me go ahead and show you why I looked for this trade on Netflix. So what we're looking at here is the 4-hour chart on Netflix, right? And we're going to go ahead and spot where are those key inflection points on Netflix, right? And so looking at this chart, we can see that right around here, around February 25th to around March 5th, we have a very clear area on the 4-hour chart that Netflix was attempting to hold above, right? We can see multiple attempts holding above that level, multiple tries to push back higher, right? Eventually, right, you can see clearly a break back lower. So we can definitely say, hey, if we break under this level, similar to what we just talked about on the whiteboard, if we see this turn into some type of a rejection on a break, retest, rejection, right, we can now look to target a short at that level with this low as our stop loss, right? Yeah. Same concepts, larger time frame.
Definitely.
So what we see here is that starting to happen. So right here on around April 3rd, we see that Netflix once again had a breaker candle underneath that major previous low.
Yeah.
We come back into it over a few days. We channel, come into it, failure. Next day, we come into it again, and we fail it again, right? And so I'm going to go ahead and now zoom in on this April 2nd and April 3rd time frame. And what you're going to see here, we'll cut that and go to the April 3rd, April 2nd. So taking this one step closer on the 1-hour chart, we can see that just reading that action at that major level and understanding our levels, take a look at the candles that we started to see once again within our 940 to 950 area. We see very clear inability to move higher, multiple attempts higher over 2 days, both Wednesday, failures to move higher, and rejections. Next day, right, we hold that low, we push higher again, push higher, and we can see a very nice 1-hour wick rejection candle right in that same 950 to 940 area. So after seeing that and knowing how major that rejection level is, that retest rejection level, on top of that, seeing us failing, for me, the daily 20, which is that blue line on your charts, and the daily 100 SMA, which is your green line on your charts, I was confident to set up a put option and a swing trade, risking back over that 950 high, because I now have very high confidence that after seeing 2 days fail at that same level, which was also that previous low that we talked about, I can now just say, hey, if it gets back above 950, I'm going to have to accept my loss. That's a pretty incredible, rip back over that very clear rejection point that is shown.
Yeah.
Same thing with my strategy, same thing with everything I'm looking for with the break and retest on a larger time frame. We can see that very clearly. We're going to go ahead and target that low, which from that point was around a 30-point move on Netflix. So if we go back to TradeZilla, we can see, if we can go to my executions, I'll go ahead and now zoom in on this. On my executions, I entered that around 228 and 255 on April 3rd. You can see I was entering near that after that rejection came in, which is what we just looked at, right? Entering on that trade and then holding that overnight. Overnight, we get a beautiful move to the downside on Netflix, and you can see I'm just scaling out of that trade as we get that morning to the downside. So pretty much the same thing. Obviously, a big example and a swing trade, which is a little different than what we talked about on those really short-term action. But if we go back to that 4-hour chart, we can...
Execution, everything was identical.
Right. Execution identical. And we can also see the importance of understanding our levels, right? Because that's really it. It's garbage in, garbage out. When you have poor levels, you're trading off of pretty much nothing. You're trading off of noise. You need to make sure that what you're trading off of is a key inflection point on the market or on your stock. Right. And so we can very clearly see, look at this, 950 on Netflix. This is a 4-hour chart. Right? It's not just a 2-minute chart.
Exactly.
Major lows, 950 on Netflix. Failing under it, retesting it right here, rejecting it. That is right there, a break, retest, and rejection. And if I would have caught this whole move, obviously it would have been an even more massive trade, right? This ended up going down to $800 per share, right? So almost a 150-point move on that break and retest. So that was a great example of a longer-term trade, a longer-term in a swing trade, break and retest.
Yeah,
quite nice. The next one we can go into I actually have a live trade that we can share. All right, so the next trade I want to go over is a little bit more realistic of a amount that I'm putting in it and a more short-term trade, right? This is my typical size and a more short-term scalp. You can see put about 30,000 in this trade and pulled out about 20%. Now, the reason that I would say the ROI percentage is sometimes skewed with the break and retest, at least how I trade it, is because my first scale off is a pretty heavy amount, right? And like we talked about, I'm taking at least half off on that first scale out to, again, reduce risk, right? Take some cash flow out of the trade. And if the trade does reverse on me, I've done this long enough to realize that, of course, in the heat of the moment, you want that thing to keep going. Yeah, of course. But there's plenty of times that it's going to reverse back on us. And why just accept a full loss at that point? When you're at your first target, I'm always going to take a pretty decent chunk off the table to make sure to reduce some risk. So these contracts went from $2 up to around $3.57, which is a pretty big move. But, I netted around 18%. And this was, again, just a break and retest long. And I want to go ahead and show you guys exactly how this played out on Palantir. So on the charts, you guys can see that this is the Palantir 2-minute chart. And I'm going to go ahead and gray out the after hours. Similar to what we talked about, that after hours is important, right? So we gray out that after hours there for us to see. Now, so what do we have here that's identical to what we just talked about on the whiteboard? We have a very clear pre-market high, right? We just talked about how we're always looking at that pre-market high or that previous day high to give us an inflection point for the move intraday. And what we can see is that Palantir had a beautiful morning drive straight above the pre-market high at $100. Now, like we talked about, are we looking to chase that move through the breakout of the pre-market high? No, right? We're not interested in chasing this move here. Right? This is not where our money's made. Of course, pretty nice, straight up, great, not interested. What am I looking for? I'm waiting for us to come back down, stop out those traders that chase that breakout long, right? And come back down into the retest. Right, and we can see that it came right back down into that pre-market high, which is that $100 level, and we created a beautiful bull flag on the break and retest of that pre-market high. Right here, we have that flagging action. We're coming back down, trading back lower, and we enter our battle zone. This is where we need to start to really pay attention. We didn't trade the breakout. We didn't chase a breakout. We didn't get stopped out because of a pullback. Right, we're not getting involved in this FOMO type environment. We're waiting for the structured pullback to our clear inflection point, which was our pre-market high. We start to watch price action. Right here, we get a nice confirmation candle to the upside, and right here, we get a nice break of our flagging move. Right here, we get a nice break of that flag, and we now have structure. Right, we're putting our stop loss below that 100 level, and we're looking to target the upside continuation. First upside continuation, typically around that 1-to-1 there, right? Taking some profits and letting things run. I actually have this trade recorded live, and I can pull it up for you guys to watch. You can see our ultimate target was here at 104, which we did ultimately actually hold this entire trade up into 104. And so if I go into my TradeZilla, we can see here that my last exit on this trade was around 1046, 1053, and ultimately taking some off later as it started to go against me. So scaling out into 1046, 1053, that being right around here, 1046, 1053.
You were level to
up
level,
at
yeah.
level to level. So beautiful trade.
On average, do you find that the first scale off is on a 1-to-1 on average?
Yeah, I would say so. And I think it does hold me back at times. It really does. But I do like to be on the side of caution, right? Something that I very...
It's working, huh?
Right. I mean, well, it's just...
The results are there.
Yeah, something that very rarely happens, or something I never want to encounter is a major loss.
Yeah.
Right? So I'm okay giving away gains if that means I'm going to lose less.
Of course.
If you've done this long enough, I'm 30 years old. There's, I'm balding. I got receding hairline, right? I've been around and I've gone through some nasty losses, right? And for me, it's about minimizing that loss, right? And if I got to scale out at a 1-to-1 to make sure that I'm taking some risk off and letting things run to my ultimate target, I'm okay with that, right? For me, that's my personality, and I'm comfortable doing that. There definitely does require, right, doing that type of, or having that type of mindset does require to be very accurate at times, right? Because if you're taking that risk off at 1-to-1 and you're not getting the runner, it does require a higher win rate to be profitable, right?
Yeah.
Right? So if you're not getting really strong risk reward to be profitable, the only other way is to be more accurate, right? So I have been able to be accurate more than 51% of the time because we've, as we've talked about, the strategy really shows up and you just have to really follow it.
Exactly, yeah.
So, there's pros and cons, just like we talked about. There's some pros, there's some cons. It's not perfect. Nothing is perfect in the market, but this is what works for me. And really the reason this works so well for me is because, you could probably see from the passion and the excitement when I see these, I just know exactly what it is,
exactly
what you're looking for every single day. Like not bringing in a whole lot of noise into exactly the setup you're looking for.
100%.
So that's the second example. So the last example we have today is actually a trade that I have live for you guys. We can play the recording and watch how I actually executed this one live. A trade that I sort of wish I had back. Got a little bit too aggressive scaling out.
Okay.
But I remember actually taking this trade. I was a little bit low on buying power on the day. I did some trading before it, started to run out of buying power. So I took this one light, and I actually used this trade as somewhat of a good example for a smaller sized account, smaller sized trade, and what I would typically do to scale out if I had some, a beginner sized trading account, right? Yeah. And so this is the SPX, and we went ahead and we longed the SPX. We took 5 contracts, which is a pretty comfortable size, put about $12,000 in the trade, and pulled about an ROI of 12%. Now, the entry was around 24, with my last exit around 29. That was the, from first entry to last exit, right? So did some scaling at 27s, did some scaling at 29s. Now, I want to show you why did I take this trade on the S&P? Why did I trade SPX? So if I see a trade on the S&P 500 futures that I really like, I'll go and trade the SPX. To still trade the options contracts, again, this working beautifully for futures as well. The strategy can work on both. So we can see here, we have a very clear, once again, pre-market high, right? Pre-market high, very clear rejection, 52.50. You can see I have this marked out on TOS, a Wednesday low. So the Wednesday of that week, we also had a clear low at that 52.50. So we had 2 confluences at that level. Now, you can see when we zoom into the 2-minute chart, we see a very clear morning rejection of that level right here. Morning rejection, we wake up, market opens, we reject that level. So no trade, right? Rejecting our pre-market high, not interested. What are we interested in? We need the break, right? First criteria, break. Okay, what did we get? We got a beautiful straight up move, straight through the break, beautiful move over 52.50. Now, if you're trading if you're chasing 0 DTE SPX on a candle like this, and you get this move against you, you are screwed, right? You cannot allow this type of chase to come in. You cannot allow yourself to trade a 0 DT SPX contract chasing a almost, a 15, 16 point move on the ES, right? You are basically buying the total expansion of that options contract, and any move lower is just going to, I would assume, just to guess, that's about a 40% loss just right there, right? So again, who's going to hold through a 40% loss? If you're not comfortable with what you're doing, you're going to exit that trade. It's just fear, emotion, not knowing what's going on, right? And so, again, just a great example of how you cannot chase that breakout. What do we wait for? Oh, shit moment again, right? Here we go. We're coming back down. to our retest level.
Yeah.
Right? Again, the pre-market high, the Wednesday low. What do we get? Look at that candle right there, right? The first sign of some buying stepping up off our retest level. What do we also get? We get our flagging action, right? Same exact thing we talked about on the whiteboard. Break, retest, right? Pulling back,
continue.
Nice candle, right? Risk. I actually entered this trade right here on the break of that, right? So here's your risk. My reward, again, likely, right? About a 1-to-1, right? Took some profits off into that and then scaled as we got our push, right?
Okay.
Again, break, retest. Here's our battle zone. We get paid to learn what happens here. We take our entry. We have our risk. Everything is quantified, right? And we can see we got a nice move on this trade. And ultimately, right, the thing that pains me is if I zoom out, we can see how far this ran,
wow. Yeah.
right? Think about taking that trade and letting at least a contract run here. And just, again, right, we talked about how we can use the next high to look at the retest.
Yeah.
Look at this. That high, draw out our zone. Look at that, right? There's your high, retest, hold, retest, hold.
There as well.
Yep. And you have exactly, right? Look at that. What a beautiful day this is. Look at that. I mean, just basically just art. That's just art, right? Here's your high, here's your high, here's your low, still holding, break, retest, long, over and over again. Look how perfect that market structure was on that day. So just incredible. If you can just focus on this and avoid the noise. And hey, it has to be a break and retest of 5250 today. That's the only way I'm trading. If it's not doing that, I need to figure out a way to unplug my mouse and just step away, right? So we can quickly, just quickly, I'll show you guys a example of this actually live, right? And you can see how I execute this trade. So let's go ahead and go back to this and we can watch this together. And you can see we're pulling back, right, to that retest level.
Yeah.
Let me take that off the screen. I just entered right there. So that was my entry. So just entered the trade. And now we're putting our stop loss below 5250 and we're going to maintain that trade, right? Unfortunately, I think I have it cut off here. I have MSTR and Netflix on the. I don't have it recorded, but you can see right here. There's another example of
you pulled it up.
Yeah, you can see it pulled up. So right there, I take some off. So there's my first sell. Taking some off. Obviously, I've had this a little cut up just for this example.
That's okay.
And we can see we get that big push, and then from there I'm scaling out.
Yeah.
But there's like a live little example of right there.
Yeah.
Is where I take that trade. I wish I could. There you go. Right there. So bought 5 right there, and you can see where the chart is at this moment.
The exact same as
that break and retest of that 5250.
Love that.
Right?
I saw on the whiteboard there.
Yeah, the whiteboard in the background. Yeah, right. Yeah, find your NTZ. Right on the whiteboard. Yep.
Vincent, man, this is an incredible breakdown. If anything, I was just reflecting whilst we were just going through those trades there, how some traders look down on break and retest.
Yeah.
Right? I think it's too simple.
Yeah.
It can't work.
Yep.
Close to $1 million so far.
Yep.
Just using break and retest. Phenomenal breakdown. Thank you for that. Any comments, though, or any questions, or drop your comment with your thoughts in the comment section below. I'm sure Vincent and myself will be checking those out. Links, however, for Vincent will be in the description below, so make sure you check them out because you are live streaming as well, right?
Live stream every day on YouTube, 8 a.m. to 9 a.m., right? Okay. And just prepare everyone for the NTZ, prepare everyone for the zones to look for every single morning for free on YouTube.
We love that.
Yeah.
We love that. More free value. So make sure you go check that out. Go show some support. But other episodes are on screen. Hit subscribe, hit like. And from Chart Fanatics, take care.